Should you invest in gold? Gold became a hot debate among investors. Billionaire investors Warren Buffett and Ray Dalio have different opinions on the matter. In this video, you will know the arguments presented by these two famous billionaires and why they are on the opposite sides of the coin when it comes to gold. Who do you think wins the debate? Watch and find out. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the essential details that can help you keep yourself up to date about finances, wealth, and investments, then make sure to watch until the very end. Let's first go over at Warren Buffett's side of things. Warren Buffett, the CEO of Berkshire Hathaway, is not a fan of investing in gold. According to Buffett, gold does not appreciate in value over time, unlike stocks and other assets that can benefit the investor if the company is doing well in the market. He has called it an unproductive asset that generates no income and has no real value beyond its perceived value. He has also said that gold is a way of going long on fear, as the price of gold tends to go up during times of economic uncertainty. Instead, Buffett prefers to invest in companies that have substantial, durable competitive advantages and generate consistent profits. He believes these types of investments will perform better over the long term than gold. To this, he said, quote unquote, "When we took over, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And then, gold is now $1,600 and Berkshire is $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it for 100 years, you can go to it every day and you can call to it and you can caress it and you can fondle it, and 100 years from now, you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do all kinds of things, but for 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. In addition to this, Warren also called gold a hunk of yellow metal, clearly showing his lack of interest in buying gold. Gold, after all, based on his view, isn't an investment that you can hold for the long term because it pays no dividends and doesn't provide any income. Warren said, quote unquote, "We would much prefer some asset that is going to be useful whether the currency is worth what it is today or 10 of what it is today, or whether people are using seashells in order to transact business, because people will go on eating, and they'll go on drinking and doing various things, and their preferences will translate into real dollars, into more or less the same economics for us. We would not trade the ownership of those kinds of assets, of course, for a hunk of yellow metal, which has very little real utility except for people who are looking to flee from the dollar, and in our view, really haven't thought through about the consequences." Charlie Munger, the vice chairman of Berkshire Hathaway, shares similar views as Warren Buffett regarding gold. He said, quote unquote, "My dad was a huge gold enthusiast. So I sat around the dinner table. My 2 sisters are here too, they will testify. So we sat around listening to the virtues of gold, and that was in, we'll say, 1940. And gold at that time was 35 an ounce. And we would have some storage and insurance costs. And here it is, 65 years later, world wars, nuclear bombs, all kinds of things, and the compound rate from 35 to a little over 400 less. Those expenses are not something that causes me to salivate." Basically, according to Charlie, the gains do not really justify the expenses as well as the investment. Knowing Warren Buffett's stance as well as his colleague Charlie, Ray Dalio still believes that gold is a worthwhile investment. Ray Dalio, the founder of Bridgewater Associates, has a slightly different view on gold compared to Warren Buffett and Charlie Munger. He believes that gold should be included as part of a diversified investment portfolio as a hedge against inflation and currency fluctuations. In an interview, he said, "Gold has value as a diversifier, as a store of value, and as a hedge against inflation and currency fluctuations." He also said that gold's value is not in its industrial uses, but in its role as a store of value, and that it's a good asset to have in a portfolio during times of market turmoil or economic uncertainty. So he believes that having a small percentage of gold in a well-diversified portfolio can be beneficial for investors. He said, quote unquote, "I think gold should be a part of everybody's portfolio to some degree because it diversifies the portfolio. It is the alternative money. We have a situation now where, when you have too much debt leads to the printing of money to make it easier to service. So all of those things mean that some portion should be in gold." To Warren Buffett, he says, "I think he's making a big mistake. Gold is like cash. It's an alternative version of cash, so over a long term, it's not the best investment. It's, a little bit better than cash over a long time." President Roosevelt closes the banks and then opens them and says you can get your money, and then they broke the link with gold. And so the history over that period of time is that money can be produced. Gold is somewhat limited. It's an effective alternative that should be part of everybody's portfolio, but not in a big way. I think every portfolio should have the right amount of diversification in it. And so I'm going to approach the question as a strategic asset allocation move to put gold in a portfolio that I believe always should be a certain part of a portfolio because there's a certain environment that it diversifies the portfolio well and a certain environment to worry about. I also think that the environment is riskier, more likely, recently now, and that environment is one in which it becomes very difficult to stimulate the economy and there's a desire to depreciate the value of currencies. What do you think? Leave your thoughts in the comments down below. That is all for this video. As always, we in EM3 wish you the best of luck. We hope you enjoyed watching this video and don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so, especially if you're looking for tips, ideas, and other related information that can help you achieve financial freedom, stability, and independence. Thank you for watching and see you in the next video.